Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this podcast, I'd like to state the disclaimer. The, the stocks which we discuss in this podcast are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily chart. A lot has been happening on the index level and overall market as well. Recently, Nifty has hit all-time high. Low in the beginning of December, November end, we had hit all-time high at the index level. But after that, there has been some profit booking and selling pressure in the markets, and Nifty breached its 21 DMA. And yesterday itself, it has also breached its 50 DMA, which is the red line here. So 50 DMA is a very crucial support for the Nifty. For any large cap stock or any major index, key moving averages like 50 and 200 DMX act as a key support levels. And if those levels are breached, definitely it is time for cautiousness, and it also indicates selling pressure increasing in the market. And coming to O'Neill's perspective, till yesterday we were in confirmed uptrend, but with the increasing distribution days, distribution day count increased to 5, and also Nifty breached its 50 DMA. So it is clearly indicating a lot of weakness in the market. So we change the market status to uptrend under pressure. That is, we are saying that the market is under pressure, even though the uptrend is intact. From here, there are two scenarios which might happen. Nifty going down, that is, the Nifty comes down and adds a couple of more distribution days on the index front. And if it breaches its 100 DMA, we will be changing the market status to downtrend. In such a scenario, we will be staying in cash, we'll be exiting our positions in the market, because when the market is in downtrend, around 75% of the stocks will also follow the downtrend trajectory. So probability of breakouts will be lesser, and the success of probable breakouts is also will be lesser in downtrend. As we are in uptrend under pressure now, our additions will be very selective. We'll be looking out for stocks which are very strong fundamentally stocks, and also giving a strong technical buy points. Then only we'll be adding them to the model portfolio. Otherwise, talking about model portfolio stocks, if there are any underperformers or any dragging stocks on the portfolio front, we will be exiting those stocks at profit or loss, depending on how they are trading at the current moment. Some of the key stocks which are in the news and which will be under radar in the today's trading session are Reliance. Is in the news because of its subsidiary Reliance Jio. It received an order from Indian Oil Corporation. This is related to provide software related solutions to the company for their retail outlets, around 70 to 100 retail outlets for a period of 5 years. Again, Reliance Jio, another related to the company is that it acquired 100% Reliance Infratel for a price of 3,700 crores. Another company, that is Rail Vikas Nigam, has received an order worth nearly 200 crores. This is related to construction of Bhesan Depot from in Surat from Surat Metro. They have received the project. 3A Infotech company, a leading IT company, received an order worth 10.2 crores for digital infrastructure from Eureka Forbes. This contract is for the period of 3 years, and they also have an option to extend the agreement if both the parties agrees. Landmark Cars will debut on exchanges today. The issue price has been fixed at 506 rupees per share. Another macroeconomic front, we have news from Japan. The core consumer inflation has hit a 40-year high in Japan of 3.7% in November. This is a major negative news if you see across the globe. inflation has been still increasing for the last 6-7 months. The trajectory has been in the upside. Most of the analysts felt that the upside is done and we are seeing a inflation topping out. But countries like Japan still are hitting fresh all-time highs in terms of inflation numbers. So the rising inflation is still going on, which is a very negative sign on the growth trajectory front because if the inflation is on the higher side, central banks will come in and they'll try to increase the interest rates of their loans. Definitely, that will impact both the retail and corporates as well because of higher cost of funds. They'll postpone their any capex plans or any spending by the retailers. Talking about institutional activity yesterday, if both FIs and DIS have net bought equities in the Indian market yesterday. FIs have bought nearly 930 crores of equities, whereas DIS have bought more than 2200 crores of equity. Overnight, US market closed pretty lower. You can see Dow closed more than 1.1% lower, S&P 1.5% lower, whereas Nasdaq, which is a heavyweight index, closed more than 2% lower. Asian markets are also taking negative cues from the global market, especially US market. You can see Shanghai is down 0.1%, whereas Kospi and Nikkei are trading more than 1.2% lower. Definitely, the overall scenario is looking not so good. Global markets are not looking good. SGX is also indicating a negative opening around 40-50 points. It's not a major gap down opening on the Nifty front, but if you look at the Asian and the US market, they're close to pretty much lower. If the Nifty doesn't turn positive in the today's session, and if it doesn't reclaim its 50 DMA, definitely it is not a good sign because the today's session, if the Nifty DMA is reclaimed, then it is a positive sign. But if the Nifty continues to fall from here, the next support is at 100 DMA, and our major support from there will be 200 DMA, that is around 70,200 level. So a lot of room is there for the on the downside. So if the Nifty, it is better for the Nifty to reclaim the index. Otherwise, we might see further sell-off happening in the markets. If you look at the sectoral review as well, a lot of stock sectoral indices are also coming under pressure, except for Nifty Bank, which is at all-time highs, and Nifty FMCG and metals are other two indices which are in rally. Apart from these three indices, all the other indices, including Nifty and mid cap and small cap indices, all are in under pressure. This is indicating a broad-based selling happening in the markets. If you look at the Nifty small cap, it is still trading below its 50 DMA. You can see here, 50 Nifty small cap is trading nearly 1.7% lower than its 50 DMA. This is a major reason for the stocks which are not getting successful after breakouts, because we want a broader participation happening in the market, and most of our additions will also come from mid cap and small cap spaces, because prospect of growth will be higher in these stocks. But currently, both these broad market indices are not doing well compared to Nifty. They are underperforming. So that is the reason we are also slightly on the underperforming side. But when these auto market indices joins the rally, definitely we will see records being getting successful, and our model portfolio are also doing well. Thanks for joining today's Rebel. Have a good